Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for November 30th, 2015. I'm going to keep this video cast short and sweet and straight to the point. My service, the Clueless 8 trading service, is dedicated towards understanding human behavior, what I call behavioral game theory, known in academic circles and on Wall Street as behavioral finance, as well as understanding the mechanics of why markets do what they do, and in tandem impart some wisdom and knowledge on the fundamentals and the future forecasts and predictions on individual companies as well as the markets. The bottom line remains the same. When you're dealing with volatility, or what I call structured volatility, you are never going to tame it. In other words, you will never fully comprehend the nature of volatility because, by essence, volatility means volatile. So, how do you harness chaos and form a linear pattern or binary movement called rationality? Now, this might fly over some people's head, but it's pure English. The bottom line is that in order to understand volatility, you have to think outside the box. Thinking outside the box alone is not going to serve your purpose. What you have to do is you have to delve into, and that's where I come in as Clueless 8 and my service, Clueless 8 Trading, to make people understand or try to help them understand structured volatility. Nothing happens on a random basis. There is always a method to the madness. If you focus on the madness, you get blown out, like many have. Many have come and gone, not just in my service, in other places. But if you focus on the method, you shall, and the key word is shall, win in the long run. The long run could be a few months for some people. It could be a few years. It took me a few years. Do I look back at it? No, because it's not where you come from. It's where you're going is what matters. The lessons learned, as I tell my son, and as we say our prayers, you learn from your failures and you rejoice in your successes. So the question you have to ask yourself, do you do that? Or do you delve in misery in your failures, which are many for all of us, and forget where you're going? Because if you don't rejoice in your successes and learn what it felt like when you were a lion and not a sheep, then I can assure you, you'll be an extremely successful trader and a better human being, to say the least. Saying all that, let's hit the technicals. The bottom line is, this is a rising wedge. We are still in this Texas bullhorn pattern that I keep on talking about, not this big one, which is the left shoulder, the right shoulder, which itself has become the inverted head and shoulder head at this point, with a left shoulder, a right shoulder, which is at around 2076, 2077 on the E-minis, shown this very clearly. If we break that, we're going to drop very quickly to 2060. We break 2060, we are looking down into the mini abyss at 2030. Those are big drops. If you drop 60 S&P points, that means you have lost roughly about 400 to 450 Dow points. Can you handle that? Yeah, if you're sitting long there and completely blind to what's going on, the fact is that that's stupid, because this is the short zone. This is the short zone. Till we bounce from here, as long as we hold this, we are still in the long zone. Simple. So this is a negative, and above here is a positive. Really simple. It really is. Now, how you handle the volatility is a different matter. The way these markets are, and I'm going to show you I put out the intraday pattern on what happened with the S&P 500 on StockTwits. I'll put it up here in a second. Bottom line is, it's volatile. Even then, we had a pretty damn good day. If you're selective, if you do what you do. I got a quick text on the side from a good friend of mine, not naming names. He said, "Did you see that chart?" Of course I saw that chart. I got 10 to 12 screens looking at me. I'm looking at that chart. So what does that mean? Am I going to freak out because I'm looking at that chart? Is it going to make any money for me? What happens 10 days from now? No. What's going to make money for me is what's happening now, a couple of days from now, on some swing longs and shorts, what's going to happen down the road. This is not a market specifically that you can just short and go home. Because if you did that right now, you'd be crying because the futures are up almost 11 points and you're sitting there going, why am I holding so many shorts? Hedges are fine. That's tactical shorting. That's hedging. But to have a bona fide, one-way sided bet on a short side, given the seasonality, given everything that I've explained between now and let's say the end of the week or the first part of next week, is almost, in my opinion, not just stupid, but suicidal. In the meantime, I would like to remind people, which I've done many times, that as long as these left and right shoulders hold, we are moving higher. And it is possible that once we break the 2098 level, the downtrend line right here, and this is the E-minis, mind you. So follow the E-minis. I mean, you're smart traders. Pull it up on your platforms. This is where the dynamic action happens. And to remind people, without deviating from the point, that a lot of the action will happen overnight. The market looked like crap when we closed here. Where is the market now? 11 S&P points higher. Is it going to stick like that in the morning? I don't know. All I know is that this is indicating we're going to have a higher open. It's possible that we crash and burn first thing in the morning. Highly unlikely, but can happen. Trading is a game of probabilities, not a game of certainties. But looking at what we are right now, which I've explained before, we're basically doing this. If we, for some reason, break the overhang of this downtrend line at 2098, we are going to go and test this 2110 level on the E-minis, which is roughly about 2116 on the S&P 500. Believe me when I tell you, because that's what the charts are saying. Now again, at 11 points higher after market, we are seeing an overbought condition on the hourly chart, right? We are. Does that mean that we're going to just reset right away? No. It simply means we are overbought right now on a technical basis overnight. Now, one of the key things I want to remind people is that what you think happens in the daytime is basically, now we are really moving up, right? Let me just give you a quick snapshot here. Hold on. Look at these. These are marching soldiers. From the close at 2079 or so, we are up 16 points right now. 15 points actually to 2092. It's a lot. What I'm getting at is, in order to maintain volatility, in order to trade volatility, you have to study, you have to focus on what I'm showing, what I'm trying to do for everyone, and not just think about what your inner voice is telling you. Fight the demons in your head. They will do nothing for you. I've been there. I know it. They will only keep you in the poorhouse. Believe me when I tell you. Listening to your miserable, dogmatic, not tactical, but dogmatic, bearish friends who are always telling you the Fed doesn't know anything, we're in for a doomsday crash, Japan's not growing, China's going to fail, the world is going to end. Yeah, makes great drink talk. And maybe a couple of bucks on the short side here and there. But net net, are you getting anywhere? No, you're not. The bears, the dogmatic bears, when they're silent, when they're quiet, when they have disappeared from the scene, is exactly the time to short, which I believe is going to come very shortly somewhere in this level. Okay? Somewhere in this level. So, right here would be when the bears are silent or they have turned bullish. Ask a few people in the room, they know. Even they're quiet. The ones who are systematically bearish, which is needed in this business because you need both kinds, right? Bulls and bears. Even they're silent. They don't come out and like piss on the market every 2 minutes. I'm not picking on them. It's all a fair game, right? Trading, have a thick skin. Don't feel slighted because somebody's basically, just bringing out the facts. Not everything's peachy and rosy out there. Therein lies the reason why the markets are going up. Old saying in the business, markets climb a wall of worry. When the worries are gone, markets will fall. And if you know exactly where the worries are going to stop, well, I can show you technically, then that's the time to really do it. I don't think the market's going to stop here. I think they're going to overshoot. They're going to overshoot a little bit. People are just going to think, oh my God, this is it. And that would probably be an ultimate shorting opportunity for a good 4, 5, 600 points. At this point, is it a possibility that we drop to 20, 30, 20, down to 2,000 on the S&P? Absolutely. But that will require a global event which will stir the credit markets and bring us down. The China Yuan Renminbi inclusion as a reserve currency is a huge thing. Not just for China, but for the overall financial complex. It's a big thing. I'm not going to get into it right now because that's a Harvard, Princeton, PhD, MBA level economics class. You want that? Come join the group sessions, and I'll be more than happy to. Send it to you. I mean, I'll explain to you. Right now, just showing you the technicalities of what's going on. So, as I multitask, let me just explain to you that at this point, the chances are that we are going to hit this level here, right there, which is about 2111, and I think we're going to overshoot to the upper end of this rising wedge that's around 2133. Will it happen by Friday? No idea. I've already pointed out what's going to happen this week. Listen to my end of the week video cast. The calendar has been fully explained. Spend some time understanding what's going on. We have had some monstrous wins. The Chinese stocks are going haywire. We got into them, and they're moving fast and furious. We have multiple winners across the board. Here's my point. You have to be attentive. If you can't be, then swing things. Buy some of these things, look at the charts and say, okay, I don't really care what happens on a daily basis. I believe it's going to go there because Clueless 8 Trading's forecasts are right 70 to 80% of the time. So I'm just going to let it go. I'm going to wait a week. I'm going to wait 2 weeks. That's swing trading. If you're swing trading, don't look at every little tick that goes on. It's very hard to do in a volatile market. But unless something fundamentally changes, don't change your attitude. People like to think long term and act short term. Believe me, I learned that from Wall Street dealing with clients, both institutional and retail. And traders are no different. Trust me when I tell you that. So first, ask yourself the question, then move forward. Bottom line is, the markets are looking fantastic. And at this point, the future is very strong. I believe the Chinese PMI numbers, if I'm right, which I'm going to post very shortly, were strong, which I explained in the end of the week report. Whichever the case, we have a little room on the upside. Make hay while the sun shines. Then we short do things. But don't get dogmatic because it'll just keep you in the doghouse. Have a great evening. Thank you for listening. Stay clueless. Tell your friends to join and profit from the knowledge. Thank you.